Hello everyone, welcome to another lovely episode with JayFx. Welcome to the official episode 9 of the Harmonic Pattern Mentorship. Okay, so for those of you who are following up, this is the official final episode we are going to be embarking on for the mentorship program. The aim of the mentorship is to give you awareness of how harmonic patterns work. So when I start breaking this pattern one after the other, you guys can actually be able to follow up and understand what's going on within the videos. Okay. So the previous episodes, on episode 3, we talked about why Fibonacci is relevant in harmonic patterns and where you can, apply them. On episode 1 and 2, I gave you guys introduction to harmonic patterns, the history and the logic of it, previous authors and mentors who have also taught the public how to use this method. And then on episode 4, we applied the first application and also look into the different patterns and how they work, from the origin of it and how it evolved over time. And then episode 5, we started having it mixed with, smart money concepts down to episode 7, where I showed you guys how it works on Elliott wave. And then on episode 8, I gave you guys an analysis breakdown. So basically, you have that awareness and you're now conscious of how harmonic patterns work. Okay, so now we're moving into episode 9, which is what we're going to be handling today, which will actually just be a casual analysis. You understand? I'm going to be applying harmonic patterns on gold because I do think there's a pattern playing out right now. As we can see, it's a corrective market, and the market is just in a consolidation. So we're going to try to break down this market and see what we can find and what we can understand using the patterns and Fibonacci ratios. Okay. So, for those of you who are new, this is a Forex Academy, or we can say a trading academy. On YouTube here, I just upload videos of analysis breakdown and how to use technical methods in trading. Okay, on Telegram, it's a community. You understand? We have individuals who have gone through my work and are into trading, who wants to connect with each other. They are also, sharing chats within the Telegram community, trying to make sure that, we keep the system flowing. Consistency is not something that one person can develop, especially in trading. You need that space to, share your work and also share ideas. So the Telegram community is for that. The Instagram is mainly to document educative content and knowledge we find along our journey because it's a team. So the team on Telegram work together to put out educative content on Instagram and YouTube. Okay, so you can join the community on Telegram to get daily analysis, and you can subscribe to YouTube to get recordings and analysis breakdown like this. Okay. We share different methods too. So in case you're not interested in harmonic patterns, there's smart money concept, there's Elliott wave, and in the future there will be the new support and resistance and probably different other methods that individuals use to understand the Forex markets. Okay, so let's look into the analysis. This is XAU USD. All right, so I'm going to be breaking it down from the trend. As you all know, market structure is the first thing I look into. Once I understand the structure, I move into the trend, and then I also move into the lower time frames to understand what's going on. But on this time frame, since we just started the week, as you can see, I'm already on the daily. The weekly doesn't have much info. This is gold. Gold has been on a range since April. So we have just been from this high to this low. Okay. And then within this range, what we can also see is the price is at equilibrium level. So equilibrium means it's not mainly within premium, it's not mainly within discount. So it's just within the range. So it can go down, it can go up. Right? So the weekly doesn't have much information to give us. But from what we can tell right now, we sell at premium, right? So when a stock is in premium, we are trying to say the price is high, right? When a stock is in discount, we say it's on the discount price. So it's time to buy, right? So, but when we say it's at equilibrium, it's not really that good to buy. It's not really that good to sell. It's just, within a neutral price. So gold, the high which was created in April and the low which was created in May has been the range which gold has been within. So price has been within the same bullish move that started in February. So price has been within premium of this bullish move. So if you measure from here, you see that we have been within premium. This would be premium and this would be discount. Now, for those of you who might be saying, Is it not harmonic patterns? Why are we talking about premium and discount? Premium and discount goes with supply and demand. You have to also understand that harmonic patterns are just patterns. Patterns that break down the range using Fibonacci ratios. So what you're doing is trading. You're trying to make technical analysis. The more method you accumulate, the more you understand the trend. So you're not supposed to say because you know smart money patterns or smart money concepts or Elliott wave patterns or the laws of Elliott wave or Wyckoff theory, then you should throw away every other thing you have learned. That's not how it works. Everything is based on law, and these laws follow the same principles. So it can be, broken down to the same thing. It's all market structure. You understand? First of all, there was a trend. Then the trend moved in a certain pattern, which was recognized. Then we called it highs and lows. Higher high, lower low. So those are called market structure. So market structure came from single, a single trend, right? Which is one. And then we broke it down into two waves, bullish and bearish, making it two. Okay? Now we have market structure and trend. Now, within market structure, we started observing that we also have what we call um, patterns. Patterns is basically saying characters which repeat themselves over time. So we started seeing similarities. We started seeing things that are repeating themselves. We started seeing things like this happening again like this. And then, we started noticing things. Then we started drawing out patterns. Then came Fibonacci ratio. Fibonacci ratio started helping us to measure each range so we can understand what's going on. So we can understand which part is the premium and discount within just this range. So Fibonacci ratio came in and started breaking down range. Now we can break down range. So this is being technical. These are just different concepts put together to understand the trend, which is the main thing we're trying to, understand. The aim is to help us understand where to risk money on. So this is all technical analysis. This is why it's called technical analysis. So every method is a technical method. It's not that you should, learn one and then that becomes the holy grail. That's not how it works. Now, after Fibonacci ratio and after all this, now we started noticing that we had multiple time frames. Now we have a range like this. And then all this that was drawing became just the daily. And now we have what we now call the weekly. So there's a new range. Now Fibonacci ratio can now break this down to this. So it became the same thing inside the same thing. Same thing inside the same thing. Now, after doing this, people started developing different methods. Different methods started popping up. Some of them became logical, which led to what we now call harmonic patterns, Elliott wave, Wyckoff, smart money concepts. Some of them are not logical at all. It's just individuals who observed patterns and created patterns. So is there, some patterns are not really that logical. Some methods are just off somebody's experience. So when you don't know how technical analysis logically works, you become ignorant and try to, force what you think you already know to work. So the aim of the academy is to give you clearance, to help you understand that technical methods are based off rules, principles, that if you keep to them, it's easy for you to understand. So the aim of the academy is just to help you understand technical methods, not to give you arrogance in any method. Okay, so whatever we teach you is a level of type. It's just a type of market structure, a level, an interpretation, something you can use to understand what's going on. Okay, so when I'm making analysis, I use different methods. I've never told anybody that I'm a Wyckoff trader or I'm a smart money trader or I love smart money. Among all methods, I love smart money because it's a storyline method. But when I'm making analysis, I'm trying to understand what's going on. So I pop up any method I can see based on market structure because I understand that the trend is forming structure and every other thing is just interpretations of key levels. Okay, so that is clear. Let's get back to the analysis. For those of you who don't have insights on what technical analysis is all about and was wondering why we're talking about premium and discount. Okay, so let me take this out. Now, so we are within premium. So price is within an area where we can say a major bearish move can happen. That is if gold is going bearish. Now, we can't tell that far unless we're going to go to the monthly and also start looking into fundamental insights of what could happen in the next 3 months. Are there things that could make gold go bearish? Because if gold is to drop, then the next 3 to 4 months will be bearish because one candle on this time frame represent the weekly, 1 week. So for this to happen, it has to take weeks. So fundamentals has to be involved. Technical analysis cannot give you that much insight. Okay. So now let's move into the lower time frame. Now we understand we're within premium. And then within this range, just from this high to this low, price is within equilibrium. Okay, so the weekly bullish premium and the monthly bullish premium, everybody's within premium. Let's go down to the daily and then see what we can, understand. Because for now, there's no pattern you can draw out here. This is just a bullish market. Okay, that is using harmonic patterns. And one thing you should also understand is that harmonic patterns are meant to give you insight into corrective moves. So for you to be able to successfully apply harmonic patterns, then you must be looking at a retracement or a reversal. If you understand this, it's easy for you to use any method at all because you have to understand what the method is for. Wyckoff is to help you understand retracement and corrections. You can't go to a clean bullish market that is still within an impulsive move and start looking for Wyckoff corrections. So the same thing with harmonic patterns. Elliott wave gives you insight into impulsive and corrective, so you can use it on any market. You just have to know where you are. All right. So these are just technical methods, and you might be using just one method to try and predict the market all your life. And at the end of the day, it might not be something that resonates with you, so you don't really know how to understand the method. So you can try different methods till you find the one that really matches your ideology or your concept of what forex trading is all about. Okay. So now we're looking at the daily time frame. We can clearly say this is a correction. So if we mark from the high to the low, and then now we try to use Fibonacci. Remember, Fibonacci is a major role in harmonic patterns to understand the range within this. That way, we can easily draw out the pattern, even if we want to understand what's going on. Do you understand? Even if we want to, like, let's say, make a pattern fall into the direction of what we're trying to predict. We know the trend is bullish on the long run, but at the same time, we can see that it's within premium. But we understand that harmonic patterns matches different levels on Fibonacci, right? So if we can see the key levels within Fibonacci, we can easily then say, okay, let's look at the pattern and say which one lines up with what's going on within this correction, because this is now a correction. The market is bullish, but the bulls are losing momentum and the bears are trying to see if they can reverse the trend. Remember, we are still within what? Premium. Okay. So now let's look, what pattern do you think this would be? Obviously, this would be the X. That is, if we're trying to look at this now, we're supposed to be looking at either a bullish or a bearish pattern, right? So if this is an X, this would be an A. That's already drawing out the bearish pattern. Okay. If this is an A, then we have to now flip this Fibonacci because this is showing us the key levels within discounts. Remember, it's now a bearish pattern. Okay. So we have to flip it so we can see the key levels within premium. Now I'm going to draw this too, so you understand the levels I'm talking about. So because this would point out premium and discounts. Okay, let me put out the background. So when I say key levels, you understand this is a key level within discounts. Now, the green, below the green is all discount. Above the green is all premium. You know what? Let me flip it so it's something that matches. I think that's how it's supposed to be. We sell here and buy here. So this is how it's supposed to actually look. So these are the key levels within what? Premium. And these are getting tested, right? So the market is looking to test discount. So if we also draw a Fibonacci to point out the key levels within discount, you would have something like this. You see the 50% lines up, and the key level of the 38 lines up with the 61. So that's like the flip zone within premium and discount. So these are all the key levels within this range from this high to this low. These are all the key levels. So whatever pattern we're trying to draw out should match these key levels. And as you can see, price is just reacting from each and every one of them, right? This is finding key levels within market structure. This is not smart money concept. I've not pointed out any other block. I've not pointed out anything. I'm just showing you harmonic patterns on a, let's say, a more advanced level. All right? Because moving on from the mentorship program, I would be breaking down each and every pattern and the logic behind them. Okay, so all I'm doing now is just teaching you and showing you how I use harmonic patterns. I made it simple on every other episode because I'm trying to educate people who don't know. So for those of you who know how to use harmonic patterns and you're like, this guy is not saying anything that relevant, I'm trying to educate those who don't know. So now we're moving forward to a more advanced level of harmonic patterns. So for those of you who know and who are already gurus, this is just me making analysis, okay? Now, let's look at the pattern. Is this bullish or bearish? Obviously, we've been testing different premium levels, as you can see. So we can't say any level is now um, unmitigated. This has been mitigated. This has been mitigated. This has been mitigated. Okay, so on this count, this has been mitigated. So this is probably getting mitigated. So either price is going to be drawing out something like this. Okay. Or price will be drawing out something like this. You know, it's one way or the other. And either way, we have to just point out what's going on now. Because as you can see, this is still the daily time frame. So one candle represents daily. Okay, so we don't have to tell everything. You understand? We just have to know where we are at the moment. So this is a key level, and this is a bearish point. And this will be pushing price down to this point. Okay, that is very, very obvious. It's very unlikely that this zone is going to get broken and price goes to this point. Because as you can see, this has already been tested. Okay, and also, if we measure this range, we would also see that this has also been tested, right? So it's likely this is bearish, and this is still very, very open. So price could be doing something like this. Okay, so we have this prediction on the daily time frame. So let's take this out so we can move to the lower time frame. If you've been following up with most of my videos and how I make analysis, you can see that this is completely different from what we do on what do we call it? Elliott wave. Do you understand? And because I'm doing it like this now, you can understand that I'm not in conflict with any of these methods. I'm not trying to force Elliott wave to work or harmonic patterns to work. I just try to predict. So let's say we were paying attention to this range. Okay, let's say we're paying attention to this range. What can we see using harmonic patterns that could support this being bearish and this being a bullish projection? This is how you do analysis, okay? Because remember, we're looking at this range. Now let's look at this range. If we're bearish at the moment, and then if we draw out a pattern, let's say a bullish pattern, we can have this as X, A, B, C. Am I making sense? If you understand what I'm trying to do here, then you know this is a very simple method. This is a very, very simple method. As you can see, I measured this range using the Fibonacci levels of this range. So I'm still following market structure. Now we have our analysis on the daily time frame. And this is how you use harmonic patterns on a professional level, making analysis. For you to know how to do this, you must know what Fibonacci is all about. You must know what market structure is all about. You must know what premium and discount is all about. And you must know how to navigate through multiple time frames. For those of you who are old members, this is not new and this makes a lot of sense. For those of you who are new members who are trying to learn Elliott wave or harmonic patterns or smart money, and this is your first video, please go and watch other episodes on the mentorship so you can understand what we are doing. Okay, so I'll go down to the lower time frame now, and then I'll see you on the next episodes. when I start to break down each of these patterns, because as you can see, I think this would be a Gatling pattern. Yeah, this would be a bullish, this would be a bearish Gatling pattern, right? But this would be a bullish projection, and then expecting price to drop from here. Okay, even if it doesn't drop that far, maybe to a more discount price, something like that. But this would be a bearish pattern. Okay, and we can see this is within premium. So we look for bearish moves within premium. So this could be lining up. Let's go to the 4-hour time frame. And yes, I use a lot wave on the higher time frame, but I think I've mentioned in the past that I use harmonic patterns and smart money on the lower time frame too. I only use Elliott wave and let's say um the neo support and resistance method on the higher time frame because those point out key levels, and those key levels point out key support and resistance or key supply and demand area, whichever you want to call it, which helps me on the lower time frame. So I use those on the higher time frame, and then I go to the lower time frame to use smart money concept. But on harmonic patterns, you can basically scale down to the lower time frame with it, so it's easy to kind of like use, so you don't have to apply multiple methods, that much like smart money concept. So now let's look at this now, since we have this on the 4-hour time frame. What do you think we can break down from this point if this was a bearish structure, which we can see clearly it's bearish? It's easy now to use to apply smart money concept as a confluence. That was what we did in episode 5, 6, and 7, right? I showed you guys how to apply smart money concept and Elliott wave as confluence. This is the lower time frame, so I'm applying smart money concept, not Elliott wave. And I'm going to use it to highlight the levels, which I think price could be bullish from. Okay, so this is a bearish market structure, and this will be a bearish order block zone, right? So this would be an imbalance. This would be a demand zone, right? And this would be our major key level using harmonic patterns. So we're expecting a prediction. So this would be my reaction, and probably if I was trading this, I would be selling from here with this to this point. And they're probably looking for a major buy for the week from here. Probably to this point. Okay, so first, this is an analysis. I'm not telling you what to do. I'm just showing you a method you can use to understand the market. You have multiple mentors out there who are trying to teach you how to trade Forex. If they're giving you clearance like this, then, you can say that's nice. But if you're not having clearance like this and you're seeing something like this, then instead of trying to see if the person is right or wrong, just pick out what you can learn. Pick out what you can add to yours and improve your own method. Okay, I'm just doing these recordings to, also become a YouTuber and also a Forex trader at the same time. So for those of you who are new, you can learn other methods and learn what you can use to improve your trading from the YouTube channel. And then you can join the community on Telegram. And then this will be all for today's analysis. See you on the next episode. Bye-bye.